Oh boy, back in business here tonight, just in time for Non-Farm Friday, I might add. Thursday evening, it's August the 5th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, great to have you with me. My job tonight is to help us find the best trade setups for tomorrow. That's Friday. No, not just any Friday, a summer Friday. More importantly, Non-Farm Friday, first Friday of the month of August. Got some big news tomorrow. Got some big moves on the charts today, and of course some big opportunities tomorrow morning in the market, so no matter which market you're trading. I'd love to cover in this video tonight. Charts are all prepped and ready in the background, as you can see. S&P's here, Nasdaq's here, gold is here. Glad to see you are here right along with us. Got a bunch of good trades for tomorrow. We'd love to buy some pullbacks on the S&P and the Nasdaq. Would love to get that next leg lower on the gold, but we got that range above us on gold right now. We might get that string pulled and rip back higher here. So we got a lot to cover here tonight in the video. Not to worry, by the time we're done with this video tonight, you'll know my favorite trades for tomorrow. You'll also know how to keep yourself out of trouble if you're trading on your own or if you're trading with us tomorrow morning in our trade room. Before we jump into the video tonight, though, as always, I want to make sure to remind you to subscribe to our YouTube channel. I published this video with my best trade ideas for the following day. I don't want you to miss, not tomorrow night's, but next week's video. So make sure you go ahead and subscribe to our YouTube channel with that little bell icon so you always get notified every time we publish something new. And if you guys have any questions for me, drop those questions in the comments section. I'd love to answer any questions that you might have along the way. And as always, if you enjoyed this video as much as I enjoyed making it, if you guys enjoyed the video tonight, hit that like button, that thumbs up here for me on this nightly newsletter. But enough of the intro, though. Time is ticking. Friday. No, not just any Friday. Non-Farm Friday. Now, of course, got a bunch of trades on our radar for tomorrow. A lot of this will have to do with how the market reacts to that news report tomorrow morning. Got a lot of bulls in the market on the E-minis right now. Bullish with a nice big open loop on the S&P. We are bullish. Of course, got a range down there on the Nasdaq. I would love to buy some pullbacks right on the Nasdaq, on the S&P. We also wouldn't mind buying some breakouts here as well. If there's one thing this market has told us recently, it is, well, the summer is here, the party goes on. So if they want to keep on pushing higher, we'll definitely have some breakouts on our radar for tomorrow. We are, of course, at all-time highs on the E-minis, so you know me. I love to trade some reversals, right? We'll look for some exhaustion reversals, some 1, 2, 3 reversals. We'll talk about the reversals here, of course. I won't leave you hanging on the sell side here for tomorrow. And of course, over on the gold right now, gold is that big drop down on the gold. Anytime we see that much strength in one direction, we know we're going to probably get another leg going lower. A little bit tricky though, a little bit tricky. You can see the buyers probably already have their hooks in this thing right now. So we got to be careful on that next short going lower here. And again, as I mentioned before, there's that range right above us, and that could easily pull the string and rip this thing going higher here. So we definitely have some long side setups, some short side setups on the yellow metal. So make sure you stay tuned for the entire video tonight and grab the gold towards the end. Now, before we jump into the charts tonight, though, and kind of get our hands dirty on these setups for tomorrow, let's all make sure we're on the same page. Tomorrow, of course, is not just your average Friday. Again, tomorrow is Non-Farm Friday. Now, of course, it is a Friday. It is a summertime Friday, so you want to think about it. Usually, these markets, again, summertime markets they have a mind of their own sometimes. So I will say normally we see a pretty short window, small window of reliable price action on a Friday morning. Tomorrow, though, with some big news tomorrow morning at 8:30 Eastern time. If that news was to kind of surprise the markets tomorrow, we may see a pretty busy overall day. But generally speaking, remember that generally speaking on a Friday morning the window is much smaller, right? So we aren't going to be trading too close into that lunchtime trading session. Usually on a Friday morning, the best price action is going to be early in the morning. Kind of wait the chop and slop around lunch, and then if you are trading the afternoon, usually that 1 o'clock to 3 o'clock in the afternoon here. But as I always tell my clients, be very careful on a Friday afternoon because the markets aren't that consistent, and usually we aren't that consistent either. So it's more of a mindset thing. If you can follow your rules and stay disciplined on a Friday afternoon, then more power to you. But the average mortal, the average human can't. So be careful on a Friday afternoon. Early in, early out for most traders on a Friday got to have a good reason to be trading after 11 o'clock on a Friday morning. Now, of course, the big news tomorrow is that 8:30 report. Generally speaking, what happens on a non-farm Friday is the overnight session is relatively quiet. Now, again, it's summertime markets right now. The party can, as we said before, the markets have definitely kind of been dancing to their own beat the last few weeks here, especially in the month of August. So we may see a relatively busy overnight, but generally speaking, it is a relatively slow overnight market because markets, of course, are waiting to see what we get from the news tomorrow. And then usually it's going to be about, 15, 20 minutes of either very crazy price action after the news comes out or kind of some slop and chop sluggish market price action immediately after. So by 8:45, 8:50, obviously into 9 o'clock Eastern time, we definitely do expect there to be some reaction to that news tomorrow. So be careful overnight if you're trading overnight, right? Especially if you're in Europe or if you're in Asia. And of course, tomorrow, right as the news comes out at 8:30, what I always do is give it 10, 15 minutes, especially on a big news report like that tomorrow, and then we'll trade the reaction tomorrow morning in our trade room. Now, of course, speaking of trade room, don't forget, I'm going to put all of the membership links you guys need to come out and join us every morning, Monday through Friday at the opening bell. I would love to have you there trading right along with us in the trade room. I'll put the membership links you guys need, the description of this YouTube video. I'll also put a big button for you on the website if you're watching this on the website right now. Before we jump forward, though, I do want to make sure you guys are aware there'll be no newsletter next week. So again, no nightly newsletter next week here. I will be in the trade room, of course, with all of our members next week. We'll be trading next week, but I won't be here next week's afternoons, right? So the newsletter will not be next week. We'll come back that third week of August, all right? So I'll see you guys, of course, in the trade room in the morning. But I got some really cool stuff I'm working on for our clients here at School of Trade. I'll be taking the afternoons off to focus on that here next week. So be aware of that. No newsletter next week. Our next newsletter will be on that Monday the 16th. Right, we'll come back after that afternoon break next week here. All right, let's get some charts going. S&P's ready. Nasdaq's ready. Gold, of course, is ready as well. I'm going to jump first tonight into the S&P 500. And of course, don't forget, we're going to have chapters. I'll put chapters at the bottom of this video down there, so you can always come back and kind of revisit different sections of this video as you need to. So grab those chapters at the bottom here. What's the biggest takeaway right now on the S&P 500? Well, we have a trending market right now, right? Trending market with a nice, strong, we call open loop move, right? Strong move going higher here. You can definitely see we completed a triple measured move. And of course, all the way up, right, to take out the old all-time highs and now put in a new all-time high just above those prior all-time highs. The most important factor right now is the strength of this recent move. Anytime we see this much strength in one direction, it's almost a guarantee we retest that high at some point tomorrow and possibly continue to new highs. And as I mentioned before, right, with summertime markets right now, the markets have been very clear to us. They have no problem buying high right now. It's almost like, well, the cat's away, the mice will play, right? So we definitely have that kind of personality going on right now. So we'd like to buy some pullbacks to levels of support. I've got areas of support then at 14.5. I get this nice trend line coming in off of these lows here. And of course, that channel would love to buy a pullback here down inside that battle zone, right? That's definitely something on our radar here for tomorrow. We also know too, again, this market may keep on grinding higher here as well. So we definitely want to be ready for any possible breakouts as we go higher. And of course, we've seen a lot of ranges. Ranges are pretty common around all-time highs. We definitely should keep an eye on a possible range up here and be ready for that as well. So if we get the pullback on this, what's the best way to trade a pullback on this? There are really three types of pullbacks that I always look for anytime I have a real strong kind of rip higher like this, right? Because we may not get that full pullback, right, down into that battle zone. Anytime we see this much strength in one direction, it's just you gotta be ready for any possible entry on the next pullback here. So here are kind of three scenarios I'll be watching for, and you can watch, of course, as well. Let's say, for example, we see a shallow pullback, right? Let's say we pull back here right, and we get a shallow pullback. What you want to do at this point now is look for a trap, right, to get in off a shallow pullback. So shallow pullbacks are fine, again, because you have this big, strong push higher. But just remember, though, you're going to want to buy as low as you can, right, in a bull market. And to do that, you want to see a trap set up, right? Traps are always going to be the best bet whenever you're kind of forced, right, to buy high, relatively high, right? Bears try once, bears try twice, that trap entry there. The next one would be a little bit deeper pullback. As the market pulls back deeper and gets underneath the moving average, now we have the ability now to trap in those bears. Once those bears get short off the moving average, now all their stops are sitting right above that high. We have all of that momentum going higher here. This is a very easy entry now. We can simply buy, of course, into those stops. And then one of my favorite follow-ups is that first pullback, right, off the moving average. We call these failure into pullback combinations, right? You want to get that pullback entry, by the way, before you get back up to retest the high. So shallow pullback is good, right? Traps. Deep pullback failures. Another thing to keep in mind too, and keep in mind too, this would also apply if we pull back to that trend line, right? We pull back into that trend line, moving average comes over. Bears think they got this thing going back in, they get short. And of course, now we look for that failure into that pullback combination, right, going higher, right? Failure, pullback, back up to retest the high. What if we really drop, right? What if we really drop? What if we really, really collapse back down? I've got a level, right, that 44.08. I wouldn't be surprised at all, right, if you get a nice little shot lower there. I would say if we get underneath this trend line, right, if we get underneath that trend line, at that point, what's the problem? Well, we just said, right, anytime we see a strong move in one direction, we expect to see a retest of that low. So in that scenario, what you want to do is you want to use the same basic idea, but it's a slightly different variation. And these are called two-try failures, right? So one try, two try. What's going to happen is those bears, they're going to try to short off the underbelly of that, right, of that trend line, if you will, right? So let those bears try a couple times. Their stops now, again, are right above the high. Again, we still have all of this bullish momentum. That hasn't disappeared yet. So the odds are pretty good at that point now. Once we get that nice juicy signal candle, right, all those sellers who got short, they're gonna cover their positions. They're gonna buy their way out. And now you've got buyers buying and you've got sellers buying, right, via their stop losses. So it's an easy way to grab a long off of that low. And then I would love to tell you that you're going to get that pullback right away, but the reality is that pullback is not as common after a really deep pullback off the high, just because when you trap in all those bears like that, the market loves to just punch, right? So what happens a lot of times is the market will run higher. You'll see this very shallow pullback, right? You won't get the entry you want, and you want to look for is a trap, right? So it's kind of it's a two-try pullback, right? It's a two-try failure, right, into that trap as we go. And again, the target, right, is back up, right, to retest these highs. Now, guys, we see a lot of this combination right here: deep pullback, bears try twice, into those trap entries. In fact, I have probably close to 100 different examples of how we applied this kind of combination to our favorite markets. I cover all the details and get lots of examples of these particular price action setups. They're all included in our Quick Start class. If you haven't done so yet, grab that Quick Start class. I know I'm covering a lot of terminology right now. Inside that Quick Start class, I'll talk about, most importantly, the price action setups I'm using. But really, the reason why the setups work so well is because of how we apply them, right? Price action is great. I love the setups. But inside the Quick Start class, I'm going to talk about the right market conditions to apply them so you'll get the consistent results, right, that you're looking for. That way, next time I say 1, 2 up into a trap, right, you'll know the right conditions to look for it, how to trigger the entries, right, et cetera, et cetera. Again, I cover all the price action setups, but more importantly, the specific market conditions that work best to apply those setups. That's the key to long-term consistency. I'll put that little link up there in the upper right-hand corner. You're going to love that quick start class, like a shortcut class, going to bring you up to speed on what we're doing here. Now, I would definitely keep your eyes open for a range up here as well. As I mentioned earlier, right, we have a big, strong push up. We're at all-time highs. Wouldn't be surprised if you go sideways into a range. There are two basic ways to trade a bull market into a trading range. One is to find a support level, like a trend line, like a swing line, right? Find a support area below the range. And what you want to do is you want to get down below that range, get those bears to come in and think this thing has reversed. I never try to pick the bottom on those. Trying to pick a bottom is just difficult. It's not very reliable. I like to wait for it to roll over, and then once I know where those bears, once I know where their pain points are, I just simply wait for that nice strong signal and buy right into those stop losses. Right? Again, it's a failure pattern. The key is though, right, at support below that range. Right, that's a good example of what we talk about in that quick start class, right? We're not just trading failures. We're trading failures at support levels underneath the trading range in a bull bias, right? It's the market conditions that really make us successful in the long term. So that's going to be one way to trade it. The other way to trade it is as we snap higher now, the amount we went below the range is oftentimes going to be, pardon me on this one, a little bit shallow, that will make the target up overhead. Right? So imagine now we get the long off the low. Now the market slingshots higher. And now what I can do is I can mark up that new high. I can mark up that low. I can drill down to a faster time frame. Right? This is a 6,000 tick chart. We're not going to trap the 6,000 tick chart. I can drill down to a faster time frame and grab that first pullback. All right? The two most common entries off that pullback, right, will be traps off the low, seller failures into pullback combinations. Again, I cover all that. I'll cover all the price action entry techniques, all the setups I'm talking about. I cover that in the quick start class, right? Those are two ways to trade a range bound market if we go sideways. Now, as we go higher, there really isn't much up here until we get all the way up. Yeah, I was like, it's like a gajillion. Yeah, it's 44.70, right? So there's a lot of open space up there after some deep pullbacks just recently. So we got a lot of possible momentum up here. Will be a few ways to trade this thing as it goes higher. One way to do it would be if we pull back to that moving average and the buyers just blast off that high. Right? Remember, it doesn't matter how strong the first leg is, but if the buyers can pull back and really jump off that moving average, now I can mark up that high, I can mark up that low, and now it's all about getting in on that, right, on that first pullback. Again, we'll drill down to a faster time frame. We'll find our bear traps, our failure setups, our pullback into strength, right, into strength combinations. A lot of times what happens is we end up right at the low of that channel, and we're just underneath the moving average for a failure into pullback combination. Again, I have a lot of examples of those price action setups inside that quick start class, right? So if you zoomed into that area, that's exactly where it would be. Another thing to keep in mind too would be if it really jumps, right, overnight, right? Really jumps overnight, strong move up, shallow pullback, higher high in price. That trap right there, right? That trap is definitely going to be your best bet. Right, we saw a bunch of these today on the Nasdaq, the S&P, right, as the market pushed to those all-time highs here. Right, we talked about this, of course, in last night's video as well. Remember, on this one though, it's all about the strength that first leg. Right, the first leg has to be like a kick you in the teeth, right? Very strong pop. That shallow pullback drives the buyers crazy. The higher high confirms the move, right? Because sometimes it goes up and comes right back down again. Right? Happens all the time, especially in summertime markets. So the strong move up is confirmed by that higher high, and everybody wants that trap. Now that might happen here, might be up here, right? So just kind of be aware. If the market pops and runs like that, just wait for those traps, right, as we go. And again, don't forget, we may pop and go right into a range up here too. So if that's the case, right, find those levels of support below, combine them, right, and follow that same plan I talked about a few moments ago. All right, guys, how do we sell this market right now? That covers all the buy side of it. How do we sell this thing? Well, obviously, I have to be careful right now because we got all that momentum here for the bulls. So a couple things you want to think about. The two ways to sell this. You have to either wait for exhaustion at these highs, right, or look for a reversal. We either have to see signs of exhaustion or we have to see signs of a change in momentum. Okay, let's talk about exhaustion first. Now, the easiest way to see exhaustion, I'm not going to go too far down the rabbit hole right now, but the easiest way to learn exhaustion is to use the 2-try rule. So as we go higher here, imagine now the buyers try once, right? Buyers try twice. And what you want to do is you want to look for entries, either A, trap high. That's the best way to do it. That's always the most reliable, right? See how it works? Buyers once, buyers twice, right? Trap high. Okay, that of course would be your exhaustion there. Or sometimes we don't get that trap, and what we get is we get a channel test, right? Off that low, off that high, right? Big, strong, juicy signal candle, and we're selling off of that, right? Remember, 2-try rule, that's kind of the key of this, right? So as we're going higher here, the buyers, they come back, they try it once, they try twice. Again, the trap is always the best, right? So keep an eye out, right? Keep an eye out for that. And then, of course, we can trade off that channel as well. Also, too, we may end up, let's say, for example, pulling back, seeing that failure. We go back up, we retest the high, right? Buyers are still in control. Now we get exhaustion. 1, 2, right? So this could easily be applied, right, as we go higher here, or after we get that retest, right, of that high, right? Makes sense? So look for the pullback, buying it back up, see if they double top up here, then 1, 2, and right back down again. Now, one thing to keep in mind too is oftentimes you'll see exhaustion like this. We'll go 1, it'll go 2, and it will dump, right? When that happens, you can grab that new low, grab that high, right? And then this is where you got to get aggressive, right? You got to get into that pullback. Right, we'll drill down to a faster time frame. We'll find our price action entries, right? The failures, the traps, the strength moves we talk about in that free trading class, right? The quick start class in the upper right hand corner. All right, and that of course also leads me into how the market may reverse. Let's say, for example, we get that deep pullback, right? Someone spooks the markets overnight, right? Deep pullback. We get below the moving average, but now instead of bears trying and failing, now those bears hold it. Right, now remember, it doesn't matter how strong the pullback is. It doesn't matter how strong the move down is. The bears have to hold this and roll. If they can jump off the moving average, now you got them, right? Big magnet down there at the weekend gap, big range down there. If this thing does 1, 2, 3, now you know, mark that low, mark that high. And again, this is where you have to find your way in on this, right? Again, I love the bull traps, the buyer failures in the pullback combinations are my favorite. But again, you want to get aggressive on getting in on that first pullback. If for some reason the market just bailed, right? Just dumped, right? You look for that 2-try trap down there. If things really start getting crazy, right, going lower here, like if news comes out overnight, right, or tomorrow morning, and it really starts to pummel, that's where you look for traps so you're not chasing the market going lower. I know it's difficult, right? You want to sell into it as it goes, but oftentimes it'll sell off, it'll trap, and then right back up again. So you really got to see it sell off and keep on going there. Get that again, shallow pullback, lower low, and that trap high. That's your entry. If I can find a channel on here, even better, right? If I can find a channel on there, even better. There may not be a channel there, so just be aware of that. All right, guys? And again, their target, of course, is down at that weekend gap, right? That is, of course, the closing price from last Friday. All right, guys, I'm sure I might have missed something. I'm sure the market will throw us some curveball tomorrow. So, as always, come join us in our trade room, and I'll fill in all the missing pieces. Let's keep going. How about some Nasdaq right now? Nasdaq is very similar to the S&P in the sense that we're very bullish right now. But as you can see, the Nasdaq has already done what the S&P hopes to do tomorrow morning. As you can see here, the key components right now on this Nasdaq, very strong push up. Right, it was pretty choppy going higher there, right? But very, very strong move higher here into the 11 o'clock hour. That, of course, leaves what I call an open loop, right? It leaves unfinished business, and you can see what happened, right? They pulled it back and they let her rip. You can also see a pretty interesting example here of how traps work, right? How we get those traps coming in, right? To get those traps, right? But buyers were really trying to get that trap below that low to get in on that shallow pullback, right? Very similar to what the S&P may give us here for tomorrow. There are, you know, again, I think the most important thing right now is we have already completed the objective. We're definitely bullish right now. There's no doubt about that. We're definitely not bearish, but we've already completed the objective, right? So the buyers got in their pullback. Now we're up here going, okay, now what? Right? Now what? Do we keep going higher, right, and look for that nice swing higher here, or do we pull back, right, and give us the chance to buy low? And when that pullback happens, does that pullback turn to reversal? Simple as that. It really is that simple. So knowing that we're kind of at not a standstill, but we're kind of at a wait and see, right? We're at kind of a point now. We're going to wait and see what we get next. Two things to keep in mind here right now. One is that range, right? One is that range. Okay, you can take the amount we went above the range, project that down below the range, and that will give you a good level of support, right? This area down here, pretty important. So we talked about ranges, right? So we have that bull move up into a range. We'd love to buy that low and trade the rotation back higher. The one thing about that particular setup is that as we rotate off the high, momentum is going to be relatively strong. So keep that in mind. Second thing is the spike in channel. The spike in channel is barely there. You can see it's barely there, right? Spike in channels, of course. What do spike in channels tell us? They tell us, look at the base of that channel. So we know right now we get a great buy zone right down inside the base of that channel. So as you can see, that all lines up together, right? It even pulls back to those prior all-time highs as well. This area down here at 13130, 132 area is a great support zone that buyers be watching. It's the low of the range. It's a spike in channel, right, buy zone. I really like the fact that we have this trend line coming down as well, because if you guys are members with me, you know how much I love expanding triangles, right? Trend lines just below a trading range. So all that looks great down there. The biggest problem we're going to have is on the pullback is momentum. The most important clue is the range. Right? Remember, there's a very big difference between a market that goes up into a range and then pulls back. That's still a very bullish market at that point, right? This is not that situation. Yes, it is a bull market. What's happening right now, though, is we went sideways in a range, we went breaking higher, and now we're supposedly going to swing all the way back down again. That's a hell of a lot of momentum going lower. And that's going to be the biggest concern we're going to have on the buy side. So as we pull back now into the low of the channel, let's get rid of the channel here, just to kind of keep it simple here, right? If we do get that pullback as we go, what's the best way to trade it? It's that two-try failure, right? Bears try once, bears try twice. Stops are just a sit and duck right now. You're in a great support zone, great support level, lots of momentum for the bulls. But again, we're rotating off that high. There's a good chance, a lot of times, you'll see a rotation off the high, and it will keep on going. We've seen a lot of that in the month of July. So let's be aware of that kind of potential there. So give the bears one try, two try. Their stops are sitting right there. Their pain points are right there. And then don't forget, these will oftentimes rip and really run higher. What I'll do in that situation is find that trap and look for that trap off the low of that channel, right? That's where the money is right there, right? That two-try failure, again, because of that momentum turn, along with that trap. Right? So failure, trap off the low of that channel. Where's my target? Bingo. Back to retest the high. And if you got an extra contract, measure the amount below, measure the amount above, right? And grab that as the runner, right? For what we call the pendulum swing. All right, guys, that's how I would buy this thing right now on this pullback. Now, we may end up going sideways inside this range for a while. So just be aware of that, right? If we spit going lower, it really doesn't change much of it. I will say if we do go sideways there for quite a while tomorrow, it may take it will probably feel less of a bearish move, but you're going to have trend lines in the way here. So it's going to be a good idea just to think about 1, 2, and then back up if we do go sideways here. Right now, as we go higher, what's our concern up here? Our concern is, again, we don't have much up here, right? I mean, you got to go to like 15,600 or something like that before you see your next real big objective up here. So this market could definitely keep on grinding higher, right? I mean, like I said, this market's made it very clear to us that in the summertime, kind of slower volume, lower participation month of August, they're willing to keep on bidding this thing higher here. So as we go higher, the two types of patterns we talk about in the S&P will be the same thing here. If we pull back to the moving average, if these buyers hold and jump off these highs, I don't care. I don't care for it all-time highs. Apparently, if we see enough strength right there, mark up that new high, mark up that new low. Again, drill down to a faster time frame, right? It's the 4,000 tick chart. We're not going to trade the 4,000 tick chart off the low of that channel, right? We'll break it down to a faster time frame, and we'll find our price action entries. Again, my two favorites off the low are those. In this case, be a bear trap, right? Seller failure off the moving average into that pullback into strength combination. I have hundreds of examples of not only the price action setups, but more importantly, the right market conditions to apply those setups. They're all included in that quick start class. If I haven't convinced you to grab that link yet already, please make sure you do so. That way you can make the most of our time together every evening on this video. And then of course, as we go higher, if we do see it grind higher, we'll look for one of these, right? If the market does grind higher, right? Strong move up, shallow pullback, higher high in price. Just keep looking at those traps, right? And you know, the hardest part about kind of grindy, low volume markets that we saw right the last couple of days here is sometimes you don't get that many entries. The bus doesn't stop to get you in. So just stay patient, wait for that shallow pullback, that higher high. I know it's tough. I know it's difficult. It's frustrating when you can't get into it, but just wait for that trap. You know, again, as long as we have enough pop going higher, shallow pullback drives the buyers crazy. That higher high in price confirms the move. And of course, now we've got that trap below that low. If I can find a channel, right, even better, not required if we have enough strength going higher here. So a lot of this is very similar here to the S&P. How do we sell this market right now? You know, again, very similar here to the Emini, where the fact that we're at these major levels of resistance, right, we've already got the open loop closed. So right now, a 1-2 trap off the high for that short is definitely on our radar, right? You know, unlike the S&P, right? With the S&P is that big, strong blast higher, right? So the odds are pretty good they're going to retest, and then we can look for exhaustion back down. The Nasdaq's already retested. So at this point, unless we get a strong move higher, right, which open up another loop to be closed, as we always say in our trade room, I can now look for those buyers once. I can look for those buyers twice. Again, do I get lucky with a trap? Right? Trap off the high? Or do we have to, right, find that channel, mark up that channel, right, and sell off of a strong signal right off of that channel, right? Either one of those exhaustion reversals will definitely apply here on the Nasdaq. And then also remember this oftentimes will just dump and really roll over here, right? If that happens and it's really pushing right hard, remember, this rotation builds momentum like this. So mark up that low, mark up that high. I apologize for the ugly scribbles right now, but you get the point, right? You get the point, right? If it really starts to pummel, right, and run lower, grab those. The entry on this will probably be a buyer failure, right? It'll go right above the moving average for that buyer failure off the high of that channel. And again, you'll know what I'm talking about when you grab that quick start class right up in the upper right hand corner. All right, that's some good stuff right there, right? So the 2-try exhaustion failure reversal right into that first pullback right off the low. Remember, in order for me to want to sell that pullback here, for to sell that, got to be real strong, right? Real strong. Got to be a real strong collapse off the high to get that momentum going, right? Enough to get, to warrant, right, taking that next trade short. All right, guys. And then, of course, the reversal, what you want to do is get down inside of that low, get those bears to hold that pullback, right, and jump. Remember, it's not enough just to see a strong move down. Right? Now, if that strong move down keeps on going, you know what I mean? Like, that's a different story, right? That's when you go out and grab that 2-try trap and you sell everything, right? At that point, right? If we do see a strong pullback and it starts to grind, then obviously something's up, right? It's definitely not a bull market any longer, right? At that point now we get that trap down here. Because now you're going, oh boy, right? Now we're bearish. I want to chase it though. You don't want to chase it that low, right? That's where those traps come in handy. Again, ideally you want to get a little bit higher, right? But it is what it is, right? You can't just pick that. You can't just short that thing, hope it's going to keep going lower. So you wait for that proof and then grab a trap on the side, all right? Or we wait for the pullback below. Buyers now come in, right? They try a few times here, but we hold, we jump, right? The strength of that jump is the key. Mark that low, mark that high, right? And we're selling that first pullback, right? Drilling down to a faster time frame and shorten off that first pullback. The target on that short side is pretty simple, right? Pretty simple. We got prior monthly highs right there at 1508. That was the prior monthly high right there. Be an easy objective here. Probably a range in there as well, right? So big magnet back down again. We'll see tomorrow, though. We will definitely see tomorrow. That covers the buy side. That covers the sell side. Again, I can't emphasize enough, if this thing comes off this high right now, give it some patience here. Let those bears, right? Let those bears dig their own grave down there and then hit them right where it hurts as it snaps back up. And if it keeps going higher, just keep looking at those traps, right? Keep finding those traps as we go through this all-time high run. All right, guys, Nasdaq is looking pretty good. How am I doing so far? Any questions for me? You can always type those questions right in on the comment section below, right? And I hope by now you've at least subscribed to our YouTube channel. All right, how about some gold? Let's wrap things up here with the yellow metal here. Now, of course, what do we have happening on gold right now? Gold, most important factor here is the strength of this recent move lower. Anytime we see a strong move in one direction, we expect to get, at the very least, a retest of that low. At the very most, would be a measured move, right? If it really starts to panic and drop, I have a runaway zone down there at 1790 to 1786.5, right? Let's call it 1788, right? To be safe. So very strong move. We're definitely bearish right now. There's no doubt about that, right? Anytime you see this much strength, the buyers basically have to hold this pullback and take it higher. You could definitely see the buyers get their hooks in this thing. Right, you could definitely see that. You could definitely see this price went lower. The bears tried once. The bears tried twice. Right, there's that channel. You can see the buyers get their hooks in this thing. But here's the thing, though: if the buyers grabbed this, and there's a range overhead, this is gold. This is the month of August. That we shouldn't be sitting here right now, right? This should be way back. This should really be back to those highs right now. You know what I mean? So you can tell something's up. You can definitely tell something's up. So bears have it. My biggest problem right now is the strength of that most recent pop higher, which really tells me there's really kind of three ways to trade this, really, when you think about it. One would be, for the short side, would be let the buyers try a couple times, find that trap, right, and short that trap. That would be probably the best possible entry. Because, again, this is not a small little pullback. It's a pretty big pullback. Usually whenever you see these really wide channels like this, and the market has time to rotate back higher, by the time this thing gets back to the high of that channel, I don't care how strong that move down was. Buyers are going to look at this on a faster time frame, and they're going to see this thing as being a trending market, right? So that's kind of one way I would do it, right? Is wait for the buyers once, twice, grab that trap, right, and short back down, right? Or we go lower, right? Grab that trap and finish off that move lower, right? So obviously, would like to sell this thing as we go lower here. The other way to trade this would be if we go higher, right? As we go higher here. If we go higher, we have that big range overhead. And honestly, this is those scenarios where we snap below, we slingshot higher. I mean, this could be, the party could really be great for the bulls tomorrow. Remember, we got non-farm payrolls tomorrow morning, right? So this could definitely lead to a big pendulum swing, complete reversal, right, on the gold. That obviously right now, that's a little bit tough to believe with all the bearishness in this market right now. But that is definitely another thing to be ready for tomorrow. And then the third kind of scenario is you get this range down here. It's not a very obvious range, but we have a pretty straightforward approach to this. You've got this market bearish into a range. They get that breakdown into a new range. There's a good chance this range may be the magnet that we end up kind of getting ourselves into tomorrow if this non-farm payroll number or if something overnight can't kind of shake this thing up out of it, right? So we may end up going sideways here into that trading range. So those are the three scenarios, right? The up, down, and the sideways here. How do we trade them now? Well, I've already kind of given away my secrets on the on the short side. Again, we have this, what is relatively a strong pop higher here. Again, relatively, because that move lower is much, much stronger. The size of that channel is very, very wide. So anytime we see the size of those channels very wide, you always want to think one, you want to think two, and then back down, right, that we go. Now, in this particular example, there's a range right here. So the most important thing right now is we don't want to sell too far into that range. For example, right, this is one of those scenarios where you really be careful selling that channel top like that. You know what I mean? We've talked about this pattern a few times already. That's going to be a really aggressive entry here. What I'd rather do is that trap, right? Get that trap, either trap up there, right, for that short. That'd be the best one, obviously. Remember, buyers once, buyers twice, trying to look for exhaustion up there. Or if we really race lower here, right, that trap just before we finish off that retest of that low, right? So we have to either see it either trap high to let us sell high up here, or it has to kind of get that strength going lower that we kind of know what's coming next, and then look for that trap right from there. Traps are your best because you don't want to sell too low and you want to sell above that trading range. Those are the best entries, at least in my opinion, as we're going lower. Now, maybe this thing pukes, right, and runs, right? Maybe we simply move lower. Maybe we pull back to the moving average, and this thing just blasts. Right? At that point now, it doesn't matter where you are, find that low, find that high, drill down to your faster time frame always, right? And grab those price action setups, which we keep talking about off the high of that channel, right? And of course, as always too, right? If it just collapses here, if we really get a strong move down, right, it starts to grind, right? If it starts to break and grind going lower like that, that's exactly the scenario where you find those traps. Grinding markets are tough because they won't give you much chance to get in. So just simply stay patient, right? Again, channel will be great, not necessary, but the trap will be critical if we start to grind going lower, like we know a summertime Friday has a tendency to do, right? And again, if we do end up grinding lower, you get a pretty good idea of where this market might want to go to, right? 1790, that 1786 area as we go here. All right, now, on the sell side, we got that covered here. How do we buy this market right now? How do we buy it here? The buy side here is really not that difficult. One way to do it would be we retest the low. We then, of course, have all these bears in the market, right? So bears try once, bears try twice. Stops are sitting right above the high. We can buy right into those stop losses, and this is one that would really be fun. This would be a great kind of follow-up trade right off of that low, right? It's a two-try failure, which, again, we've talked about many times in this video already. Two-try failure into that first test. Remember, the first test is always the best test. And then sometimes what'll happen is you won't get that pullback, right? And the market will begin to grind. You know what I mean? You won't get that pullback. You're waiting for it, right? You're waiting for it. You're like, what the heck? Come on, pull back. But it won't pull back. And you know why, right? Because it's short squeeze. And so when that happens, it's anything, right? Anything, any trap, right? And I always tell my clients, if you're not comfortable being aggressive like that, go to one contract. Go to half size, go to quarter size position. Just find a way in. Right? If it pulls back even lower, like what I like to do is go half size position on the first trap. If it comes back and stops, hit it again, right? Because the odds are so good when you've got that big pop up. The odds are almost a guarantee they're going to retest the high, right? So if you have to, cut that size down a little bit. Don't scale into it, so to speak, right? But keep a portion of it if you don't feel confident because you're getting in so aggressively. Right? So that's an easy way to do it there too. Two-try failure. And if it grinds higher, and whenever I see a grinding market like that, don't fight it. Just wait for a trap. If you can find a channel, even great, right? But channels really aren't that necessary when the market's really grinding like that. 'Cause you know that range above you. Remember, ranges act like magnets, right? So we're trying to go back up into that trading range. The next one will be if the market races higher. So the buyers have it right on a silver platter right now. All they have to do is hold this pullback. If they hold that pullback, now it's all about finding channels, right, and buying pullbacks off, not necessarily pullbacks, right, but price action entries right off the low of that channel. Or if the market blasts higher, right, if it really blasts on us, right, blasts up, shallow pullback, higher high, that two-try trap setup will be great as we go higher here. Again, especially if it goes and starts to run, right? It starts to really grind, right, as we go higher here. So keep that in mind, right, as we go up, right? Either it can be a channel pullback or a trap entry if the market starts to really sprint as we're going higher here. I think probably the hardest part for tomorrow will be if we end up in a range, right? If we end up in that trading range, right? Let's say we do go into that range here. If we go into the range and we sit there for a while, if the market pushes higher, be very careful selling that, because that will be what? A failed rotation. Remember, we should see this thing, if it goes into a range, it should go back into the range and it should complete that rotation, right? Then we should see the buys going back up, right? So right, if it goes into that range and goes sideways tomorrow and then it goes higher, that's a huge bullish clue, right? At that point, now you're thinking about that, right? You're thinking about that two-try trap getting long, right? You're thinking about that. You're thinking about that 1, 2, 3 reversal and getting, you know what I mean? So that's going to be a big part of this as well, right? Depends on kind of how the rotation works. Ranges are kind of funny like that. You got to watch rotation, right, pretty closely. But, again, if we end up going back into that range here and then we hit the low, everything pretty much stays the same. We can still trade the 1, the 2 back up into that range. In fact, that'd be a great trade, right? Again, we're still very bearish, so you still want to respect those bears. 1, 2, right? 2 try failure, and then rip it, right? Mark up that new high. You get it, right? Same thing over and over again. Once you learn how to trade a trend, how to trade a range, it's really kind of the plug and play, right? Over and over every day in our trade room, right? And that's why I love the futures markets, because once you learn the personality of these things, the sky is the limit. I like that much better than having to scan for stocks and doing things like that every day. Anyways, got a pretty good plan of attack now right here on the gold. And again, I'm sure I missed a couple things here and there. I'm sure tomorrow with that non-farm payroll report at 8:30 Eastern time, I'm sure the market will surprise me somehow. So don't forget to come out and join us every morning in the trade room, 8 o'clock Eastern time. I'll put the link you guys need in the description of the YouTube video. I'll also put a big button for you right below me tonight on the website to get registered and come trade with us every morning at the opening bell. Please don't forget, you can always call the office. Don't let my ugly mug scare you away. You can always call that toll-free phone number. I'm always here to answer the call. Even if trading with me isn't on the table right now, I can always help point you to the right brokers, the right computer software, all that type of stuff, so you're ready for for trading later on in the month of August. I got live chat on the left. I got live chat on the right. Don't be afraid to hit those up, and you can always drop questions in the comments section below. But that's it for me now, guys. Again, no newsletter next week. No newsletter next week. Of course, I will see you guys in the trade room next week, of course. But I will be working on some new exciting stuff here for our members here at School of Trade in the afternoons next week. All right, guys. So no newsletter next week here. I always hate to leave you guys hanging, but I got to get some extra stuff done for our clients here at SOT. In the meantime, get out of here. Enjoy the rest of your evening. Rest up. Big day tomorrow. Might be a short day, right? So watch the time. And as always, right, thanks for tuning in tonight, guys. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.